And welcome out to our halftime report here, presented by Tackle Trading. As always, Coach T, Tim Justice here with my brother Matt. How you doing this morning, Matt?
Tim, doing really, really, really good. I'm really excited today. Today's game day, bro. It's game day. It's wild card day. It's between the up and coming, bad news Bears, Oakland A's against the evil Empire. The evil Empire. If anybody's cheering for the Yankees tonight, you cheer for Jamie Dimon and the hedge funds and the institutions and the banks, and you celebrate the central bank. And I'm talking to you, Marquise. I'm talking to you. It's this today, baby. So I'm excited today.
This kind of fan I am. I don't know if I can name a player on the A's. Not a single one.
We've talked about how you've lost control of any ability to talk about sports. So
all right, sounds good.
Markets to be fair, though, most people can't name a player on the A's. I mean,
they
have the lowest payroll in baseball. So
Billy Beane built an incredible franchise based on that basic premise: is that you can bring anybody in, and it's all about analytics and data and whatnot. Highly recommend that book, Moneyball. If
Moneyball's a great book.
Anything by Michael Lewis. Michael Lewis, one of my favorite authors.
Think about how important that book and what Billy Beane did, though, bringing in the analytics approach to baseball. And you might just think, well, that's just baseball, but look at how algorithms and analytics has impacted every industry, not just in sports, over the last 15, 18 years. And I'm not saying Billy Beane fostered that, obviously, but I am saying he was an early adopter of analytics, and it was awesome.
Yeah, pretty awesome. Markets are fascinating to me almost on any given day, Matt, but I love trading and I've done this forever. Market could be a doji and I'd still find it amazing. Things that are interesting in the news to me, we're going to go through it one at a time, but I do want to break down the overall indexes. The S&P is up about 0.5%, NASDAQ and the Dow. Let's start with the S&P 500, the ES contract here, Matt. We're nearly breaking into new highs. We talked about where the breakout is and where the resistance is earlier this week, 29.47, 29.50. Here we are at 29.41. What would have to happen for you to call it a breakout by the end of the day?
Close above 29.50.
Yeah.
For me. Yeah. I mean, for me, if for others, they might say something different. And like I've said before, whoever's right, I don't know. I mean, the future will say who's right on that, but you got to give it a number. And for me, 29.50, a little bit of a whole number right above that wick at 29.47. It's up above, so, and let me kind of explain why for me, 29.50. I put resistance at 29.40. That's personally where I put resistance. But again, that number is that zone around 29.40, and that zone for me is right around 1 ATR. So if the ATR is right now at 20 points, as you can see down here on my ATR screen, then that zone would be 10 points above the number I give it and 10 points below the number I give it. So if I give it a 29.40, then I'm buying a breakout at 29.50.
Yeah, I think so as well. I mean, I'm buying, many different candidates here today. There's plenty of bullish setups. There's no doubt about it. As I look through the heat map from the broad market on the S&P, utilities are underperforming. And that's that interest bearing type of sector, Matt. People have been moving away from interest type situations where you get a dividend or a guaranteed payment, even through the bond market and whatnot. Utilities are selling off here today. A couple of other red stocks and red areas, but really XLU is the only one that's showing weakness. Generally strong. Facebook is having a little recovery. I'm still bearish on that stock. The financial centers, the JP Morgans, Wells Fargo, Bank of America, they're all up and showing some strength. What do you interpret when you see a heat map that has some mixed information from sector to sector?
Well, whenever I see a heat map that predominantly has utilities stand out as red, that tells me the market's buying. Yeah. That's number one. We've seen that time and again. Every time we pulled up the heat map, when we've been doing this halftime report, Tim, and the heat map's red, the market wants to buy, right? Because the utilities are those proverbial safe havens out there, low risk, dividend paying stocks type thing. So whenever you see those down, that means money's flowing out of there into the rest of the market. So obviously with the market approaching its all-time high, showing strength today, I'm taking this as a bullish thing. Now with the market at resistance, obviously I said I would not buy the market unless it broke out 29.50. But Tim, that doesn't mean there's not a tremendous amount of stocks that are setting up and triggering for really good trades as this market is now pivoting. A lot of those industrial plays that we looked at last week, and there's a lot on the scanner reports this week as well, but a lot of those industrial stocks, I mean, Tim, look at them. I mean, they're all kind of starting to set up. Look at Rockwell. I mean, just a beautiful hair trigger right above that 190 mark. You look at AME, pivot above $80. You look at CME pivoting off that support bounce 20-day moving average. And Tim, it goes on along down the line. These setups are happening in the industrial sector, and that I see that across the board. The difference. So I see a lot of the industrial sector picking up. But outside the industrial sector, Tim, you look at the NASDAQ stocks, and I want to show you guys something. And I asked Cody to kind of look into this. I am a little concerned about the NASDAQ. And I know the NASDAQ's showing strength, and we'll get into the broader market here in a second, Tim. But I want you to see something. If I come here and I say, okay, I'm looking at the NASDAQ, right? I'm looking at the NASDAQ stocks, okay? And I want to look at, just all of the different NASDAQ stocks. Well, how many are setting 52-week highs? Okay. 31 stocks are setting 52-week highs, obviously led by the biggest name out there in the world called Apple, right? But if you look at stocks that are setting lows, and let me get the new low, you have 74 stocks in the NASDAQ that are setting all-time lows. So you have 31 stocks setting highs, you have 74 stocks setting lows. That just shows you how top heavy the NASDAQ is right now. So in a sector like industrials, man, it's like, throw a dart at the industrial index and pick a bullish stock there, and it looks really, really good. But when you're looking at the NASDAQ, you're seeing a lot of mixed signals from the top to the bottom. And that just kind of, and I know, again, NASDAQ's doing really, really well, but it's so top heavy. Industrials is like pick the index. NASDAQ's like you got to pick stocks.
I agree with that. The NASDAQ has, even on the very top end of it as well, you've had strength and weakness across some of the major names. Amazon's down today. Apple is up today. Facebook is recovering, but generally has been down for 2 or 3 months. Some of the biggest names in technology are splitting and going into different directions. We'll get to Apple here in just a few minutes. NASDAQ pressing up against resistance. If you're in profits here and you're not hitting new highs, you're not breaking out and showing strength, I think you take a little profit off the table, Matt.
No, I agree with that. I agree with that. And when you're talking about your Facebooks and your Apples and your Amazons and your Microsofts and your CRMs, we saw all those big name stocks all do the same thing throughout 2017 and honestly coming into 2018. But through the summer, Tim, you started seeing a decoupling with those FANG stocks and those high-end NASDAQ stocks where you saw the Apples of the world do this, but you saw the Facebooks of the world do this. You saw the Netflixes of the world do this. You saw Google start to do this. And so, you started seeing decoupling in the NASDAQ even as early as a few months ago. And so that's why I'm a little bit hesitant on the NASDAQ right now. But on that industrial, like I said, you look at the industrial index here, there's nothing to be hesitant on right there. That's beautiful.
Yeah, I agree with that. I like the industrials. I love Boeing. We've been talking about Boeing pretty much every day. That stock continues to be a juggernaut over time.
It's about time. It's about time, Boeing. We've waited so long for you to do what you can do. And look at that. Look at that breakout. That's why you watch the scouting reports. That's why you come to the halftime report. That was a beautiful, beautiful, beautiful breakout.
Well, you had entry points on Friday and Monday, and you can probably throw a dart at that chart lately. And obviously it's been going up. So it's easy to kind of call that one. It's been strong. It's been one of the best ones out there. There's no doubt about it.
Listen, timing is everything when it comes to short-term trading, position trading, not so much long-term investing. But if you were like, and this is why those reports are so important. That trigger was happening on Friday and Monday is what that trigger was happening. And for somebody that's like, well, I'll get around to doing my routine on Wednesday. Guess what? You're too late. Mm-hmm. You're late to the party on Boeing. Now you got to wait for the retracement.
Yeah, not waking up and getting ready for your trading day on Monday probably cost you $1,000, if you think about it like that, just on Boeing alone. That's if you do one contract. I know.
That's just on one contract, brother.
Yeah, I get it. But a lot of people probably would position size around 1 or 2. I know most traders, most
of the traders we know, and most of the traders that are in our community, they're on a high dollar stock like Boeing. Yeah, you're 1, 2, 3 contracts.
Yeah, beautiful chart, beautiful chart. All right, let's move on to the RTY here, Matt. I do want to talk about the Russell 2000 and some of the relative strength here today, but relative weakness in general. Whenever the market's going to recover, obviously small caps have the potential to come back, but you've got an inside green candle here, Matt, on 2 very, very sharp red candles. do a thorough analysis of the weekly and the daily chart and talk about the potential risk here. On the weekly, we're on a pay range pullback. Okay. We are literally on the channel and it actually looks good. You're coming towards the 200 period moving average. I know for me, I have bull puts that are in the 1500s, at different expirations and whatnot.
I wouldn't worry about any bull put on the Russell. And obviously you're talking cash flow condors here, Tim. I wouldn't worry about anything under 1600 if it's within the next, 30 days. Okay. And I wouldn't do anything from a hedging perspective if you're 60 days out, because you probably are all the way down into this 1500 range, most likely. Right. So I don't think the with the break that we had last week on the NASDAQ, and I was quick to come off the bullish stance on the Russell 2000. I was all the way back here talking about how that was changing, but I wouldn't do anything aggressive with the management on that bull put side. You still have the range, and you're overextend to the downside. You can expect a retracement back up into that 1700 area. You also have the 200-day moving average that is going to act as tremendous support for any major market index as well. So I got it ranged down right now coming into support. I expect the Russell 2000 to come back up into that 1700. But I'm going to tell you right now, Tim, I think we do have an extended move to the downside on the Russell 2000 coming into the next month or so. I see this as significant for me right now. I see that breaking of support and basically the Russell 2000 giving up a lot of the gains it's had for the year, especially against some of those other indexes. I mean, the Dow Jones is now performing better than the Russell 2000 year to date. S&P 500 is, NASDAQ is, and even as early as a month ago, Tim, the Russell 2000 was the second best performing index year to date. This is obviously changing right now. You're seeing weakness in the Russell 2000. I see this more as people locking in profit on shorts and cherry picking the bottom on some stocks. But I don't see this as a buying opportunity in the small cap index in any capacity. Not yet. Okay, not yet. I still see it coming into the 1700. Watch that sucker pivot right back down and test that 200-day moving average over the next few weeks. If you're looking at it on the weekly chart, though, it does give you a little bit of a different type of feel, as they always do. But what you're seeing here, Tim, even though this is still technically a bullish trend, what you're seeing is tremendous slowing momentum on the weekly chart. Momentum from this movement, and if you look at momentum, we'll go 1500 up to 1700. The market from April through July moves 200 points, and then it retraces back down to 1650. And then in the next 2 months, it goes up to 1746. So you only had about a 100-point movement. Tim, that is a slowing momentum trend on the weekly chart. So you're seeing a short-term downtrend on the daily chart. You're seeing slowing momentum on the weekly chart. I don't see a lot of evidence where you would say, hey, listen, let's go get aggressive in the small and the mid caps. I think this is shorting opportunities in the small cap index. The blue chips are dominating.
Yeah. And speaking of blue chips, let's go over to the Dow and take one peek at that chart as well, while I kind of talk about a few of the headlines. Two major things in the news for me today, Matt. There's a few others that I do want to talk about as well. But one, Jerome Powell came out and he had some very positive things to say about the economy. And, when the Fed chairman comes out and is that direct about how strong the economy is, the market's going to like it. The other thing is that in Italy, they decided, okay, we will listen to what's going on with the EU and maybe we'll change our budget deficit targets. And the market did like that. That was a pretty quick storyline.
I don't think it was a maybe we will change our budget. It was you will change your budget or we will not borrow you money type situation. So Italy caved into the EU demands on basically their debt to deficit and whatnot. It was supposed to be 2.4. That's what Italy wanted. They caved down to 2.2, 2.0 respectively. You mentioned Jerome Powell yesterday gave a speech, and you might as well. He was loving the economy.
He was loving remarkably positive.
He was loving the economy. And then Charles Evans today. Charles Evans, the Chicago Fed president, Charles Evans gives a speech basically saying very, very positive things about the economy. And you know what? We say very positive things about the economy because guess what? The economy is doing pretty good, right? I mean, unemployment, look at your unemployment claims just today, a robust unemployment claims number that was really, really good. Manufacturing data has been good. Consumer data has been good. Retail data has been good. GDP data has been good. The only lagging in the market is that you really kind of see there is housing data, which is concerning, but housing data is not concerning in the short term. Housing data is concerning in the long term. So in the short term, from a short term economics, there's nothing to see here. The U.S. economy is doing well. It doesn't mean there's not those proverbial things that could stop it in its tracks, right? But in the short-term standpoint, the economy is doing really, really well. If you want a job, you have a job.
Pretty much. Consumer sentiment's at an all-time high. And, Jerome Powell's looking at inflation measures as well as the unemployment rates and all that kind of stuff. And they're seeing strong indicators. There's no doubt. That's also tells me they're going to raise more rates, Matt. Rates
they
are.
They are. And I do want to say something, because when we talk about the U.S. economy doing really, really well, guys, it doesn't mean there's not people that are really, really struggling out there. You're seeing a very top-heavy market the same way you're seeing a top-heavy consumer. So I understand that there's an imbalance in wages between the rich and the poor, and I understand there's an imbalance between 401ks versus IRAs versus investors who do this versus that. I understand that there's things that we need to improve, but when you kind of put the blinders on and you shield yourself from the hardships of economics, and all you do is look at the data points, Tim, the data suggests that the U.S. economy is rip-roaring right now.
Yeah, I agree with that. And you can see it in the large caps. Large caps do have relative strength. Small caps were down, but people are going after the biggest companies that are taking advantage of these conditions right now. Give me the U.S. dollar. As we're talking about the Federal Reserve, might as well talk about the dollar next. Rally, Matt, and quite frankly, it might be a breakout.
To this.
Yeah.
I'm a little surprised at this. An extended rally could be a breakout at 95.5. I'm not touching that breakout. I am a little surprised that we're seeing so much strength in the short term come into it. But, the dollar's been surprising me for the last 8 months, to be honest with you. So expect the unexpected to a certain extent. But that is a breakout. Whether you buy it based on the overextended, that's up to you. I'm not buying it, but the dollar's showing strength, no doubt.
Yeah, the dollar is showing strength, and some of that might be about what Jerome Powell is talking about. A strong U.S. economy usually will indicate a strong currency and a strong dollar. For now, it's showing strength. I've been long-term fundamentally bullish. The chart is still tricky, and it's really hard to believe in that chart on the short term, but you got to respect it.
It's crude oil all over again, Tim. Crude oil.
Well, maybe we should go long so we don't miss it.
I know. It is. But crude oil was doing the same thing. It was hitting its head at 70, hitting its head at 70, hitting its head at 70, testing the 200-day moving average. And then it breaks out and we're like, I don't dare it. Just, so, there is some of that going on here, but the dollar's slightly bullish here.
Matt, listen, I make hundreds of trades every month, and, I'm not going to overthink missing one or two of them. You know what I mean? No. You have to trust what you see, and you have to trade with confidence and position size accordingly. The crude oil chart, I don't regret not trading it because I didn't trust the signals as I was seeing them. The dollar here, I don't see an entry point. It is strong, and I will respect it. I'll use it.
Don't get me wrong. I missed the crude oil trade, but I love my long-term investment in USO doing covered calls on it. So
yeah, there's always... That's the information.
Yep. The one thing I'll say about the dollar here is, fundamentally speaking, you take the short-term analysis out of it, Tim. Fundamentally speaking, when a local economy is doing well in a rising interest rate environment, that is going to boost the currency.
Yeah, for sure. And usually when the dollar goes up, commodities will drop, but that's not necessarily the case with crude oil. They've decoupled in the last little bit. Crude oil also up 0.23, not a lot of carry through on this breakout here, Matt. EIA numbers came out today, and they famously got them horribly wrong again. We got to get the exact number. I thought it was the funniest thing I saw.
Got to get the numbers.
Yeah. Well, every Wednesday, the crude oil inventories come out from the energy, investment. What does the EIA stand for? Now I've got my Energy Information Administration, and they had an actual build of 8 million barrels.
Information part of that in their report. No, it's funny. It's funny. And by the way, Tim, I loved your tweet today when you're like, they're so bad at this report, they dropped the color code from red to orange. But it's true. Look at the crude inventory report. The forecast of 1.1, the actual at 8 million. Man, guys, come on. I could get my 9-year-old daughter to give you guys estimations that are probably going to be a little bit more accurate than what this number represents. But you still see the price move based on the actual versus the forecasted number. You know, crude's overextended. There's no trade here, Tim. The trade that you're going to wait for on crude is a retracement back down into support, wherever that support level will be. We don't know yet. It could be a Fibonacci number, a moving average, could be its gap range down to 72 perhaps. But I do believe within the next week and a half, we're going to have a really good trade setup on crude coming up.
Yeah, I would buy a pullback.
I'll buy a pullback, no doubt.
Yeah.
Easy.
You know, buying the breakout up here, I have a hard time with, but I do like the long-term strength. And like you said, for an investment, maybe a USO or a covered call. And there are stocks in the energy sector I do like, by the way. ExxonMobil is looking great.
Oh, you look at ExxonMobil here. Absolutely, Tim. Let me pull up XOM here. One of the big docs here showing up tremendous strength. You could buy that breakout of 87.
Mm-hmm. Yeah. So there are plays in energy. It may not be for me, and crude oil is a swing trade, but there are position trades and other ways to play it. Very, very bullish right now. Little hesitation with only up 20 cents. I got to tell you, you would think that, it could rally more through that breakout. Hasn't happened yet. Give me a look at the metals market. Let's talk about gold next. I want to take a peek at that chart. Dollar up, gold down. At least there is logic in the market.
Can I ask you a question?
Candle. Yeah.
When you see gold down on a day, are you happy?
Well, I've put options on it as a day trade, so I'm happy on that. But I will not hold those. I don't have any confidence in a downward move on this.
I got to tell you, I just get happy when gold goes up on a day. I do.
Yeah, I get it. You're a gold bug, right?
I'm not a gold bug. I'm not a gold bug. Gold bugs believe in owning gold above all things, right? That's not what I am. I believe in owning gold as a hedge against currency. There's a massive difference there.
And one thing I like about this chart, Matt, and I'm with you, I actually want to see gold go back up because I believe in it more fundamentally if it went into an uptrend. It's hard to buy gold until it breaks 1220. But you look at those moving averages. One very simple use of a moving average is to help you identify momentum changes. When they were expanding and when they were very big and far apart from each other between the blue and the red, that means that the short-term trend was increasing in speed. Now that they're pinching in tight, that's telling us that the trend is moving sideways. You can see it in the candles, the moving averages, the resistance I got there at 1220. Matt, you buying at 1220?
No, not at 1220. No. You got two resistance levels right here happening. You have your 1220, which is very important. But Tim, you also have this 50-day moving average. Look at that sucker. I think a close above the 50-day moving average would be a potential trigger as well. Aggressive, it would be aggressive, but a close above that 50-day moving average has not happened since April.
Yeah.
It is tested 1, 2, 3, 4, 5, 6, 7, 8 times. It's tested 7 times in the last 3 weeks. It hasn't been able to get above it. That 50-day moving average is literally acting as a short-term resistance level. Every time the market hits it, it comes right back down. So I do believe you could buy a breakout of $50 of the 50-day moving average with a close above the 50-day moving average, but that would be aggressive. I still think the better trigger, if you're on the buy side, is above 1220.
I would have a hard time buying on a moving average trigger because I don't do that within my systems technically, but I get what you're saying. I mean, it has been a catalyst and a close above it would show you something. But if I'm buying at 1217, I would just wait for 1220 to break, right?
Well, that's reason it's aggressive versus conservative on the entry point. You could pull the trigger. It's not in your system, but it is in some systems.
For sure. Let's move on to silver. I've been talking about this 15 level on silver for a while. The gold silver ratio actually has silver probably as a better short-term value, and it needs to contract here a little bit. 15 for me is the trigger on this one. What is your read on that changing trend?
My read is this, Tim. In a month from now, we're going to look back at a nice little head and shoulders breakout of 15. That's my read.
It may take some time, and what that would be, Matt, is it would have to have another pullback back into that 1450 zone, 1430, somewhere like that, and then maybe a run. But yeah, I'm with you.
Yeah, I think what is today, October 3rd?
3rd.
Okay, so let's visit that November 3rd to see if we got that head and shoulders formation. But we're seeing the early indications of it.
For sure. Take a look at natural gas, last commodity, and then we're going to get into individual stocks here. I've been extremely bullish on natural gas.
Boom, boom, boom.
And for quite some time. You know, we talked about the breakout at 3. We've talked about the breakout at 310. On the halftime report on Monday, we even said, hey, here is another new entry point. It is really rocketing up that chart. It's been strong. If I'm in long here, Matt, that's probably a little bit of a profit taking zone some point here in the week. Maybe not today, but it doesn't really have the behavior to run from here.
320 was resistance level. It got up above that. I wouldn't touch it unless it comes under 320. Above 320, let it run.
Yeah,
you know, it does very well. If you were in that and you had a short term, you had a stop loss under 3 here, Tim, that would be one of those moments where you say, okay, let me adjust it right there underneath the candle low, maybe underneath 315, I would say. Sure. So, you know, under 315, you adjust it, but above 320, I think you let it run. I mean, you got a lot of momentum. You got good volume on this movement over the last couple weeks here. You know, Tim, it's hard. The hardest thing to do in trading, in my estimation, is to let a winner run. I think that's one of the hardest things to do.
Well, yeah, I agree with that, but that's also one of the smartest things you can do. That goes back 100 years. Best trading book that I've ever read, and on many people's top 10, is Reminiscences of a Stock Operator. And simply the mindset Jesse Livermore talks about in that book is when things are going well, you should be adding to positions, not taking away from them. Right? I mean, I'll give you an example of that, and let's get into individual stocks. For me, the most important stock in the market today is Apple Computer. Matt, Apple Computer breaking new highs. I've had a core position on Apple Computer for months and months and months in Leap Options. After that earnings report, I've been adding to it. I bought more today.
Yeah.
I mean, why would you not? You know, a lot of new traders instinctively, if they see profits in their account, they would say, well, I got to hurry and take that profit or the market's going to take it back from me. I've got to hurry and lock it in. And there's that old mindset. And I've heard this phrase too many times. It drives me crazy. You can't go broke taking profits. It's not that I have a problem necessarily with the individual logic, but you're
not going to get rich either.
You're not going to have the big runs. Small gain, small loss, big gain. You got to have some of the big gains.
I was watching an event with John Bollinger one time, famous for Bollinger Bands. And he was putting on a webinar that I was watching. This is a few years back. I want to say 3-4 years ago. You know, I was just kind of, I was there just to kind of see certain things. And he was talking about his account in that year. So he was doing like a year-end review of his account. And he had made thousands and thousands of trades, Tim. And small loss, small gain on a majority of them, right? But there was like 5 or 6 of those trades that he had made in that year that substantially increased his account versus everything else because he let those winners run, right? And for example, if you're quick to lock in profit, Tim, because you got a good bounce off Apple's earnings report, you missed out on another 30-point movement in Apple, right? I mean, you got to let those winners run. You got to let the data do the talking. It's a mistake I see new traders make a lot. And it's tough and difficult to overcome is when you log into your account and you're up a couple percent, right, relative to your account, and you're like, oh man, I made some money. Let's lock in that profit right now. Oh, it's so fun. It feels so good to make a little bit of money, right? And it's like, okay, that's fine. But are you pulling that trade off because you just enjoyed making a little bit of money, or you're pulling that trade off because the analysis and the data is telling you to pull that trade off? And if it's the former, then you're making a mistake. You should never manage your trades based on profit loss. You should manage your trades based on your system and your rules and the data. And in Apple here, Tim, Apple's been a juggernaut, no doubt about that. There's been a little bit of short-term hiccups, but this is one of the strongest stocks in the entire marketplace. And it's shown increasing momentum coming into the breakout. There's nothing to see here. You let that puppy run.
That's my take on it. And I will say a couple of things. First of all, a big shout out to the halftime crew. We're at the halftime of the halftime report. And so I always like to pause and acknowledge you guys. Give us a quick thumbs up. Hashtag halftime crew. Got a couple of comments coming in here that I love.
Real quick. Yeah, Beth, Beth has she has put on, again, Leap call options, and you bought it when IV was low. I'm not sure IV is high here yet, Beth. We got about a month before their earnings. I still expect volatility to go up a little bit coming into their earnings. But if you're looking out on a Leap a year from now, short-term volatility is not going to change and not going to stop me from making that trade. Would you agree, T?
Yeah, and that's actually exactly where we were heading on this one. I agree with what you're saying, and I agree with the assessment. See, 24% implied volatility is probably in the mid range for Apple Computer. It can go higher from here. It could also come lower from here.
Well,
the Leap option is going to be
32. I would say 18 to 32 is kind of the range of volatility that Apple has. You're currently at 25. You're kind of in the mid range there.
Sure. And I'm not too concerned about that on a Leap option, quite frankly. I know it has a really big Vega rate, but the IV doesn't change as quickly as the short-term options. So, Beth, I think you'd be okay there if you see.
And I also think that when you're doing a Leap there, that's not a swing trade. That's not a position trade. That is an investment type decision, right? Mm-hmm. You just don't want to put in the full amount of money into the actual stock. So instead you buy a long-term Leap. So for example, for those of you who don't understand what we're talking about here, so if I wanted to buy Apple here on the breakout at 230, not because it's a swing trade, Tim, but because it's a long-term investment, right? It's something I'm finally ready to do. I want to go buy 100 shares of Apple, and that's going to cost me $23,200, okay? Well, not everybody has $23,200 to apply to a trade on Apple. And so what a lot of people will do, and by the way, I want to give you a number here, Tim. When I say a lot of people, I mean everybody, okay? And I'm not kidding here. Guys, when you're talking about the equity market is a $20 trillion marketplace. And,
right.
and that's big. But the derivative market is a $580 trillion business around the world, okay? So when I say everybody, I mean it. That's what everybody does. They trade derivatives, they trade options, they trade futures, they trade those types of products. So for somebody who understands the options market, who doesn't want to allocate $23,000 to a long-term investment in Apple, what they can do here is they can say, oh, let me go all the way out to say January of 2020, right? Or June of 2020, or I can go all the way out to January. The longest term Leap I can do is 835 days, Tim. I can go out literally for close to 3 years out in time on Apple. And instead of putting in, $23,000, at that point, I can put in, $3,800, and that allows me to lower my cost tremendously. And I don't really have to get that concerned about theta because, Tim, I'm losing $2 out of $3,800 a day. That's nothing.
Correct. And by the way, I have the money to buy the shares on Apple, Matt, and I bought the Leap options, just like you're talking about.
Efficiency.
Because it's the efficiency of money. I can now use that capital that I saved by getting into the core position with a Leap, and then I can do a lot of different things with it. And there's a lot that goes into trading, obviously, with Leaps. But one thing that I would tell everybody out there, what we're talking about here more is trend trading and position trading, Matt, maybe even an investing type style. There was a newsletter.
I think Leaps are investing. I wouldn't even call that position trading.
Sure. There was a newsletter I did a couple years ago called Developing a Trading Identity. I'm going to put the link in the chat here, guys. Go check it out. It's about a 45-minute video and a write-up of what the difference between day trading, swing trading, position trading, and investing is. Mm-hmm. And earlier, one of our oldest and most loyal members, Slavic Jurasek, he was saying, Tim, when I day trade, I do have to lock in profits quickly. Absolutely. And I get that. It's a different mindset when you are position trading or investing than when you're day trading.
I'm a Slavic here. I mean, when I'm day trading the euro dollar cross pair, Tim, I will be like that, locking in profits. Yeah. I mean, without hesitation. But we're also talking a very different mindset from swing and position trading to day traders. Day traders are, well, let's just say we're unique. I mean, day traders are the unique species when it comes to traders. We lock in profit aggressively. We're aggressive on the entries. We understand economic reports, all that jazz. So I agree. It's a great comment. On day trading systems, locking in profit quickly will definitely improve your overall percentage profitability from a day trading perspective.
Give me a chart on Costco. Let's move from Apple to Costco. And Costco's got earnings, Matt. We've got some prep here to do probably on Costco if you're going to
trade. That comment's too good. I agree. Animals are needed in the markets. Yes, day traders. We are animals. We're crazy.
Yeah, yes. Bull, bear, and hogs, right?
Yeah.
That's right. Yeah, I agree with that. Earnings on Costco here, Matt. It's a big company, over $100 billion in market cap. I'd have to look up the exact detail. Whenever a company this size with that kind of stability in their earnings is going to have, the event, I'm not too concerned about a big gap. If you look at the history of Costco, it doesn't have a lot of gapping. Okay. And
if you look at the history of Costco in the last 2 weeks, thanks for not triggering on our trade, sucker.
Never
needed to close above the 20-day moving average, and it just stuck there for literally like 2 straight weeks coming into earnings. So I'm upset with Costco, but I love this company.
If you're upset with Costco, just take the family down for lunch. Just kind of walk around, get the free snack.
Free lunch. That's exactly what we're going to do today.
Oh, I'm going to get my money back on Costco by getting the free sample.
I'm going to go eat their free food. Lunch on me, everybody. Let's go to Costco.
That's funny. In Utah, that's a very popular thing to do. I don't know if that's everywhere else, but we got a lot of kids everywhere. In Utah.
Utah consumers are no different than every other consumer. We all love free stuff.
Sure. Earnings here, Matt. Is there any play?
Well, let's look at it. I mean, obviously, you want to, you need it versus that, all that. But let's just look at the data. Number one, Costco does not move on earnings almost at all. It's literally, I mean, look at this, Tim. There's nothing here. There's very little price movement, 1.5%. Right here, very little price movement, 1.5%. Here, you got a little bit of a gap range here, but that's literally like 2%, Tim. Over here on your last one, it goes from 165 down to the open of 158. That's that's about a 4% price movement. So Costco is one of those companies that doesn't really move a lot on earnings. So I'm not that concerned about it if I'm an investor. But also with it not moving a lot on earnings, you're kind of in that short strangle iron condor type system versus say an inverted butterfly or a Debicon system, right? Mm-hmm. So basically you're either buying it or selling the volatility here, but I don't see anything that would justify something that expects movement one way or the other. The market expects a $5.6 movement, which would right there be in that, what would that be, Tim? 5.6 off 2.4, 230. What percentage would that be?
Oh, $5 on 230 is about 2%.
2%, about 2%. Yeah. So the market expects 2%. That's about in line with where the gap range is. I don't think you got an edge here.
I don't think so.
I don't even need to look at the options chain. I don't think you have an edge here.
Well, the MMM, obviously you're not going to get a big gap. And so you're not going to get any volatility out of it. It's going to be hard to price in ROI. The only thing I could even instinctively think about.
There's no short strangle here. There's nothing here, Tim.
There's no money there. Probably just a wait and see. Although I will say this, one of the reasons why I love earnings season and why I price earnings no matter what's happening is because whatever Costco does, it's going to drive the retail sector. It's going to drive the consumer sector, and you will see action out of the market tomorrow because it's the only stock in the news tomorrow. I mean, we've got some other Constellation Brands and whatnot, but I think Costco will be the major storyline from their earnings after whatever happens with the non-gap situation. Let's move on to the next one here, Matt. What's one of the stocks you're focusing on today? I know you were talking about.
Well, let's go Cody, then me, then you. Okay, sure. So we're looking at 3 stocks here. Cody, what's your stock here?
So since y'all are talking about some investing long-term, more fundamental or versus, trading, I love it when both set up. So good old Warren Buffett's Berkshire Hathaway, long fundamentals, has a perfect technical setup today. And I made this trade. I got in this morning.
Cody loves Buffett.
Who doesn't love Buffett?
He worships at the Buffett altar. And I will join you on that worshiping there, Cody, on this trade. This is a wonderful trade.
That's 215 mark, and then now it's pulled back right to it. Breakout pullback on Berkshire Hathaway.
I love the trigger above the 20-day moving average too, Cody. I mean, it's a really, really good setup. How'd you trade it? Did you go stock, calls?
Long call.
Long call. So long call. Where'd you target?
I did a fib on it. I believe my target's about
230-ish.
I was going to give you so much credit, young man, until what you just said.
Until I said the fib.
Oh my!
Your hatred of fib is unjustified.
Really? I read an article on fib the other day because it just came up randomly in my news feed, and I clicked on it, and I went over and read this like 3,000 word article about how to use fibs. Matt, he talked about 12 different ways to draw them. Nobody can even agree on how to use the damn things.
I can agree. I just think everybody does it wrong.
Yeah, I'm sure. It's a subjective way to try to trick your brain into objective analysis.
Get off it.
C'est la vie.
Hold on. But can't you say that about most technical analysis? I read an article the other day from MarketWatch, Tim, that basically said this. These things don't work. These things don't work. These things don't work. Technicals don't work. You can't project short-term price action. And basically, it was this hedge fund that was, or this investment bank that was trying to basically say nothing ever works in the financial markets. So just come with us and we'll buy an index fund for you.
Well, that's silly too. Technicals do work, but they're not that complex. They're pretty simple.
What I tweeted, I said, hey, listen, don't rip on it just because you can't read a chart.
Right?
I mean, so I get, and I'm going to say the same thing. Yes, most people who think Fibonacci, talk Fibonacci, they probably haven't even read Elliott Wave Principles, Tim, right? So that's where a lot of your frustration comes from, is these rooks who come out there and they're like Fibonacci this, Fibonacci that, Elliott Wave, wave up, corrective wave down, ABC cycle this, and you're like, yeah, you watched a 3-minute video, you chump, shut up, and go, basically basically Tim does this whole, get off my lawn routine when it comes to Fibonacci and all that jazz. But Tim, Fibonacci is something that does work if you know how to draw it correctly. Right. And to be able to draw it correctly, you have to be able to understand what is a pivot and what is not a pivot. And that's where the mistakes lie, is not in drawing the Fibonacci. It's knowing where to draw the Fibonacci based on what is a pivot and what is not a pivot. That's the disagreement I have, is just people do it wrongly.
This is a good entry point. There's no doubt about it. It doesn't matter what lines you put on that chart. Anybody could see it. You can, and
great. It's a great Fibonacci setup, isn't it, Tim?
It is a wonderful entry point. You could be trading.
You can't say it.
Can I draw my Fibonacci retracement? At least give me that. Can I draw my Fibonacci retracement?
Oh, why from that pivot though, Matt? Why not the one before?
Because I chose to.
The one after?
Because I chose to, because I'm not using the gap range, and you know that. So I'm pulling it from the pivot off the gap range, and you know what? That is Goldilocks, T. That's Goldilocks. In between the rising moving average, pivot off the 50% Fibonacci, above the 20. That's golden. That's the Netherlands golden. That's what that is.
Cody, wonderful trade. By the way, where'd you get that trade, young man?
I got that trade from the reports. So I do have to give credit to, I believe it was on the option report. It
was an option report, Dick. But again, Cody does worship at the altar above it.
Well, and it makes sense. Berkby's in the financial sector. We looked at the heat map earlier, guys, and we saw that financials were doing very, very well. It's also in insurance, and it has good fundamentals and a good trend map, pullback, pivot, trigger. That's 2 green candles in a row and confirmation today.
I grew up as an Elliott Wave Fibonacci technician. That's how I grew up my first 5 years of my trading career. And you and I have a lot of fun with fibs, but the only thing I use Fibonacci for is Fibonacci retracements. That's it.
And by the way, if somebody is a very smart and very good trader and they're using some mathematical analysis to just help them with one component of the overall way they trade, I'm okay with that. I think, quite frankly, and I don't know if I've ever explained it exactly this way, one of my biggest pet peeves with these magic little things like this is that it changes the narrative for new traders to thinking if they can perfect their little tricks, then they're going to be a good trader, when really trading is a simple thing. Most of the work in trading is in management. Okay. Money management, trade management, the things you do after you get in. Anybody can learn to make good entry points, Matt. Entry points are not that difficult. Heck, you have a whole page of entry points from tackle trading on the weekend. Option report. You have 15 trades you're going to make through the week if you just follow the reports, right?
Well, yes. I mean, but at the same time, I do think it's complicated in exactly where you pull the trigger on that.
Right.
you know, where that retracement stops into. I do believe that can be somewhat difficult, especially for new traders. But you are right. I mean, the real skill of a trader isn't on when they pull the trade, when they put the trade on, it's when they manage the trade and pull the trade off. That's the real skill of a trader.
Yeah, I agree with that. I like it. Love the setup here, Matt. A couple other stocks I want to talk about here today. I think you had mentioned LB. Is that right?
Okay. Yep. I'm going to look at a short on LB simply because it drives my older brother Mark crazy. That, and it's a nice little setup to the downside. Trigger for me is underneath today's low, underneath the close, underneath the 20-day moving average with a target of 26.
Mm-hmm. Yeah, pretty simple chart, obviously. I like simple charts. I like trading when it's just really, really obvious. Beautiful old support, new resistance, triggering over. I think it's already confirmed here, Matt. I don't think you need to wait for anything further. Would you be looking at that moving average and saying, hey, give me another 25 cents if you're sitting here looking at it now?
No, I just think you've seen a little bit of an intraday bump here. Okay. And so I think it's much better suited for a swing trade to wait for it to go underneath the low of the day. So for me, if you're not in the trade already with the trigger from yesterday, the trigger would be underneath today's low.
Yeah. Give me a Budweiser here and be
action.
Well, you know, I had beer money and in my pocket on this one here, Matt, and then the gap up just took it all from me. Yeah, I'm still in because my stop loss is above where we are right now. I think just right above the 90 mark, pretty much.
I'm still going to say that we in the halftime crew, that we correctly identified the stock for you to get your beer money for Oktoberfest, and it's not our fault you failed to pull the trade off when it was slowing momentum.
Listen, I had a trading plan. I executed it. I'm never going to overthink part of it. I had a lower target, right?
No, there's no slowing here. It was down, 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 down. I was just kind of making fun here. No, that's just a random gap coming back up into the resistance channel. I think, you know, a little bit of bad luck on your part, no doubt. But I would just take that and run. The trend's still the trend. I think it's going to come back down to 85.
Yeah, I agree with that. AMD. I want to take a look at that one. This has been a high flyer and a very popular stock. I know it's one of your favorite, Matt. We're now on a retracement in between the 20 and the 50 period moving average. If we put a Fibonacci up there, it might even be in the Goldilocks zone.
Let me give you the Fibonacci just to make you happy.
Good request, Tim. I like it.
It's getting to the Goldilocks zone. It tried it today.
I still love the company. I like the fundamentals of the company. I like what they've been doing recently. Some profit taking here, also some rotation into other stocks in this sector out of AMD here. What's your read, Matt? I like the candle there. Got a long lower tail, red candle, not a trigger candle, not a confirmation candle, but it's not a bad candle.
I love a doji tomorrow, followed by a confirmation upward movement in price, and that's a trigger.
Yeah, I agree with that. Yeah. And one I want to look at that I want to talk a little bit about management on is PXD, Matt. You know, I've been bearish on this stock, and we don't always want to just, you know, pound the table and say, hey, these are the ones we're winning on. Obviously, we have wins and losses and all that kind of stuff.
We talk about losses too.
Yeah, we talk about our losses quite often. In fact, I think you can learn losses as many lessons from losses in the market as you can from gains. I had bear calls on here, Matt, and I have bear calls on for a couple weeks, and it's breaking out in the money now.
And you still have them, correct?
I do. I got to get out of them today or hedge them or roll them. I got to do something with them by the end of the day.
Well, I would not roll them. And this is why. You have momentum to the upside. You when you put on the trade, the bear call spread, we were over into this range, right? I mean, I remember analyzing PXD. I did a swing trade on PXD. You decide to do the bear call PXD. It's a good trade at the time. But Tim, this trend now is not bearish. It's not even neutral. This short-term trend is bullish here.
Sure.
Okay. So rolling up in a bullish condition is basically leveraging your mistake, in my opinion. Does that make sense?
100%. And that's where, you know, there are more complex things that a veteran like myself is willing to do. I might churn the trade into a different trade, adjust the trade into a different spread. The one hesitation I have with talking about adjustments and hedges, if it's not like in a lab or in a cash flow club, or like tonight when we do the Tackle 25 Mastermind group, Matt, I'll be talking about when to add put options to your covered calls and different nuanced strategies. I don't really like beginners to do that kind of trading, quite frankly.
I also think that, kind of like with that Fibonacci discussion we like to have, T, that sometimes traders that understand management, they talk too much about it and they micromanage it, and then they turn a small loss into a big loss because they think they can manage the risk and roll the risk and roll the risk and roll the risk. And to me, that's kind of like saying, all right, I'm going to bet $5 on blackjack, and if I lose, I'm going to bet $10. And if I lose that, I'm going to bet $20. And if I lose that, I'm going to bet $40. And if I lose that, I'm going to bet $80. And eventually, obviously, I'm going to win one of them, so I'm going to get all my money back, right? And that's fine if you have an unlimited amount of money. Okay, that's fine if you have an unlimited amount of money. But in the market, Tim, you can roll and roll and roll and roll, and PXD could continue to go up and up and up and up and up, and it doesn't have to come back down, right? And so basically, you're leveraging your risk here. What's wrong with just saying, I'm wrong, let me take the small loss, and let me go put that money to work towards something that's going to work for me? What's wrong with that?
Not only is there nothing wrong with it, if you're out there and you're listening to me right now, that's the best bit of advice you've probably been given in a long time. In trading, the most appropriate decision when you're losing and when your stop is reached, almost every time you should just get out. Okay. Take the hit and move on. And this is what Matt has been saying for a long time. Small gain, small loss, big gain, right? And if you're within your money management, when your stop loss point gets reached, just take the lump and move on, Matt. They call it an equity curve for a reason.
I know it sounds sexy to be like, oh, let me convert my bear call into this strategy, and let me do this against this, and let me then go buy this. Okay, bear call, let me go buy this, call option to hedge the bear call. And it's just like, oh my God, why don't you just get out and go find something that's going to work for you, so you don't have to spend your time looking at something that obviously isn't working, right? Just get out and move on. You're absolutely right, Tim. There's 3 outcomes to every trade: small loss, small gain, big win. And if you're managing a credit spread and all of a sudden you're taking what could be a small loss and putting into the hypothetical big loss category, I think that is a mistake.
Well, and couple of things. If I added call options on the long call, for example, that would turn it into a ratio.
It would ratio it. Yeah.
Here's the problem. I then am negative theta, right? And I don't want to go deep dive on the option Greeks here, but the reason why I built this trade to begin with was to create cash flow. So now I'm going to turn the trade into a completely different philosophical trade. I mean, that doesn't really make logical sense to me.
Well, not only that, Tim, but also come back to this. If the same condition, technical condition, still applied today that it did when you put the trade on, then yes, you could maybe roll your credit spread. And I believe you have the 180 by 185, correct?
That's correct.
Okay.
Yep.
So you have the 180 right here. You got the 180 by 185. So basically you're sold the 180, you bought the 185. All right, fantastic. If the technical condition was justifiable to roll that up and out, you would have to roll it up and out, which basically, for those of you who don't understand kind of the trading philosophy and lingo, basically what Tim would do is he would right click and basically close this position and roll it to a different expiration date and basically come out of the money to the 190 by 195. So basically that's what we're talking about here. But Tim, the technical condition has changed.
Yeah,
it's clearly changed. Now, whether it goes up and down from here, we don't know. But what we do know is that the condition is different today than when you put the original trade on. So everything that you would be doing to try to catch up to the loss would just be leveraging and making a bigger loss unless this thing goes right back down. And to me, that again is a mistake. Literally, we've talked about this for now 6 minutes, Tim, and 5 minutes and 90 seconds ago, we both knew what to do, right?
Correct.
Okay. It was just a matter of working out the details and making sure everyone understands, because sometimes in the halftime report, guys, we'd like to have you guys see inside our thought process, right? I mean, Tim, you knew what to do. I mean, you didn't need my advice on that. You're a hell of a trader, one of the best traders I've ever known. So but we wanted to talk about it in front of our team, because I think it helps to get into the inside, the mindset of it.
Well, and by the way, this is not going to, be a big part of my overall portfolio today. I have like 25 different positions on in my cash flow account. And so and that's just my personal style of trading, right? I like to have a lot of trades. I like to spread them out across different areas and different things.
See, and I don't like that many trades, right? Yeah. Tim, you love 30, 40 trades.
Oh, right? I can do 50, 60. I have no problem having a lot of trades.
Me, I can't do that. I just can't, because I don't have the time necessary to manage that type of stuff. Mm-hmm. I had, 10, 15 core trades for me is ideal for me.
Well, and everybody's different. I actually asked that question in the clubhouse once on how many, and you had a few of our veterans like Hero say, hey, I like 30 or 40, but most people are 10 or 15, Matt, I would say. But here, and this is my point, I guess. If you want to, and if you're not psychologically sound, and if you don't work from your list, and if you don't follow your rules, you can trick your brain into convincing yourself into some really stupid shit. All right. Okay. Pull back that chart pull back that chart a little bit, because if I want to, and this is where, as a trader, psychologically, that you're battling with this stuff. Well, it's pay range up. Well, it's hitting the 20 period moving average. Well, the only reason why it's up is because crude oil is having that big breakout, and maybe that will come back here soon. I could talk myself 10 ways from sideways into staying into a trade. But when my rules and my management plan have been violated, you have to move on.
The worst thing we do is try to convince ourselves to stay in trades.
Yeah, I agree.
and not on the winning side. It's amazing, Tim. Traders will try to convince themselves to stay into a losing trade, but they will lock in profits so aggressively quick that they never actually make any money long term. It's an amazing thing.
Yeah. One last stock I want you to just give me a comment on is General Motors. It's up 6% here today after it's teaming up with Honda to do some autonomous vehicle stuff. I also saw that Aston Martin, Cody, I think, had their IPO today, not doing very well.
Not a good year to be a car company.
It is not a great or an easy market to be an automaker in. GM having positive news, and that chart is still just absolutely dead ugly.
I could care less whatever GM says or does. Who cares? Put it into the line of this, Tim. JCPenney got a new CEO today. Do you care?
I don't. Oh, that stock. I haven't.
When was the last time you were in a JCPenney, brother?
I don't even know where one is.
There's one in Price.
Well, I'm sure maybe.
Come on now. There's a JCPenney literally within walking distance from your house in the district.
I've never been there. I'm not a shopper.
Live 4 blocks from the district.
Well, yeah, but there's like 100 stores over there. I don't want to know what all of them are, because then I might have to go to them at some point.
No. See, this is how low JCPenney has come into the social conscious, Tim, because you drive there all the time. You drive by it all the time. It is a massive, massive building that says JCPenney on it. It's right by the movie theater, but you don't care about it because it's gone from the social conscious.
Yeah, it's true. There's nothing this stock could do to get me interested.
No.
I mean, look at how ugly it is. It's $1 stock.
Congratulations, Jill Sultan. You're going to get fired in a year.
I don't know about that. She might be a very, very wonderful business person.
Sure, no. The joke was on JCPenney, not on Jill.
Yeah.
I'm sure she is a wonderful, wonderful individual. Thank you for giving me the Me Too movement right there.
Well, and last just bit of thought here. Tonight, Matt, JCPenney is not on our Tackle 25 because it's not been fundamentally sound. But we do have a list of 25 stocks that we've picked as part of a long-term covered call type system. There's a lot of great stocks out there. Biogen, Baba, Facebook, Intel, E-Trade Financial are some that have been underperforming. But then you got your PayPals and your Apples and your Microsofts that have been juggernauts. We're going to go and we're going to break. Yeah, it's been a mixed year. It's been a mixed year. We're going to go.
2017, really quick, Tim. 2017, The average performance on the Tackle 25 is 24% gain. The average performance. Mm-hmm. The worst performing stock was only down 15%. We had multiple stocks over 90%. The average cash flow was right around 2.5% per month on the Tackle 25 stocks. It was the best year it's ever had. The Tackle 25 has been mixed this year.
And what I'm going to do tonight is and this was based on your recommendation, Matt, I'm going to teach our mastermind group for all of our pro members over there at Tackle Trading. And I'm going to teach a mechanic here tonight, guys, on how and where and what to use the put option for when you want to hedge your covered call. Okay. Mm-hmm. So Matt, like on a stock like BABA, when it breaks support, which put option should you buy? How do you do it? How do you execute it? All that kind of stuff.
It's such an important concept for the covered call system, right? Mm-hmm. Because the covered call system is basically a system where you're trying to get to zero cost as fast as you can, basically. So if I buy a stock for $10 and I rent out a stock for 30 cents every single month, it's going to take me on average 33 months to cash flow enough to pay off the stock. Does that make sense?
Yeah.
Okay. So that's what the covered call system Tackle 25 is designed to do, to maximize cash flow to lower cost. But a lot of these Tackle 25 stocks are not dividend paying utility stocks. They're actually, some of them are growth based. Some of them move quite aggressively. And so when the stock breaks support or retraces back up into resistance, it's very important that you add the insurance component to the covered call, thus making it a collar trade, right? Mm-hmm. So basically, we ripped on, aggressive micromanaging. And so in the Tackle 25 tonight, we're going to teach you how to manage appropriately.
Mm-hmm, for sure. Join us over there tonight, guys. Thanks for being a part of Tackle Trading, obviously. Guys, good job, Cody.
Like and share. Thanks for supporting all everyday halftime crew. We love you guys, and we'll see you same channel tomorrow.
Mm-hmm.